All right, good morning. This is Monday, July 27th. A little bit of pre-market analysis. I kind of zoomed out a little bit on the 4-hour time frame, just to kind of confirm our bias here. Um, Obviously this is a high, a low, a high, a low. So that's what we're talking about in the ICT series right now, is looking at market structure. And if you would assume that, you get a high, a low, a high, a low, we get maybe another high. You can use our Fibonacci retracement tools and see where these are coming in at. That's about 50%. And then let's see where this comes at. This is about 50%. So we honestly could see this market go down today and continue trend. Let's get down to a smaller time frame. We actually have a new week opening gap. What is going on in these new week opening gaps? The market likes to come back down and fill these new week opening gaps because the New York hedge fund companies and banks weren't able to grab sitting orders down here. It jumped up, the market jumped up. So the banks have to go down here and grab the orders that are just sitting there. If not, it's very rare when you see these new week opening gaps not get filled, or new day opening gaps. But it does happen. But in no time, it does eventually come down and grab these orders. But since, on the 4-hour time frame, we're at, this is NQ, by the way. We'll go to ES in a minute. Since we're already at that 50% retracement, we have a little bit of room. Then you can assume that we actually will come down and fill this new week opening gap. Our draws on liquidity right now are these Asia lows, previous day lows. So that's also something we're talking about in the ICT series right now, is focusing more on these previous day lows and previous day highs. You can see we're in a little bit of a range here, but we have taken out the previous day high already, some pre-market highs. So we could see a reversal here. Honestly, if we go up to this pre-market high and get a 5-minute inversion, I wouldn't be too opposed to taking a small contract size down to fill this imbalance, and maybe even head to this previous day low. Remember, our favors are, it's favoring shorts today. Okay, it's favoring shorts unless we get some tweet or anything, or some type of true social post. It could head up, and that's why we react to price. We don't react to anything else besides what is price doing. Here's ES. We'll look at the 4-hour time frame on this too. Again, high, low, high, low, high, low. We need another low, especially these draws on liquidity down here. We'll check the Fibonacci on ES. About right here. 50% retracement. And we have filled more than 50% retracement. We're actually at the 0.75. So this has a good chance at going down today. Let's see if the market is decoupled. You can see NQ is up 1.27%, and ES is only up 0.82%. So I like to switch back and forth from these. Looks like ES had a bigger jump last night. So NQ might be the move on the weaker indice on taking shorts, if we are going to take these shorts today. And then go back to ES. It looks like we have a Asia low. Let me mark this out. Let's drop down to the 5-minute. Pre-market highs, relative equal highs on these 5-minute little horn candles right here. It also wants to, there is order sitting down here for ES2, and then the previous day low. I would love if ES comes and takes these pre-market highs and this London high from a couple of days ago and gives us a nice inversion. That would be awesome. I mean, that's all the liquidity on the upside, and we can focus on heading to the downside. Now the market could dump. So if it does, then we have a continuation model that we use where you get a huge dump and then maybe like a 15, 30-minute candle, fair value gap, come in, boom, boom, hit previous day lows. All right, everybody. Hope that helps for pre-market analysis for July 27th. Check out the ICT series. We talk about a lot of the stuff we just went over today. And also, episode 4 is dropping tonight. Thank you.